Thanks for tuning in today's episode of VCing by Brayside. I'm really excited to be talking to Tiang Lim from Forge Ventures down in Singapore. Good morning. Wanted to introduce and say hi to my friend Tiang Lim from Forge Ventures. I have not talked to you, Tiang Lim, in a long time, so it's been good to kind of catch up as well and kind of see what you're doing. So, love to get a sense. Yeah. Tell me a little bit about yourself, or tell the listeners and viewers a little bit about yourself and your fund.
Sure. Yeah, my name's Tiang. My friends call me Tiang, right? I'm a Mr. Fu. It gets a little confusing. I'm a co-founder of Forge Ventures and a general partner of the fund. So Forge is a operator-led seed VC looking to partner with what we think are exceptional founders working on opportunities of tomorrow from Southeast Asia. We're headquartered here in Singapore. We just raised our fund one of 24 million, did a final close a couple months ago, investing across the region in Singapore, Indonesia, and Vietnam. By design, the fund sector agnostic. So far, we've made 8 investments, 5 of which are publicly announced, across sectors like hospitality, education, Web3, fintech, insurtech, consumer. So it's a pretty broad mix. What else can I tell you? I've been in venture for the past 6-7 years. Previous to this, I was at a fund called Seed Plus, which was a seed fund that was managed by Jungle Ventures here in Singapore. Did that for about five years. We ended up raising about 20 million, investing across India and Southeast Asia, and had done pretty well from the fund, thankfully. But I haven't really been a VC for that long. So previous to this, I was at a company called Evernote, which was just acquired last month. I started the Singapore office for the company, launched a product here, ran a business, and managed the region. And before that, started my career as a early founding team of a fintech company here in Singapore. I was the PM. So that's me. Had always been in venture, tech, and product in Southeast Asia, across seed, growth stage companies, and now VC.
So what do you think is the secret sauce of Forge Ventures? You talked a little bit about kind of early stage and building, and kind of the secret sauce vis-a-vis, I think, style, and I think some of the funds in the region, whether it's Asia in general or Southeast Asia.
Yeah. Well, I'm not sure if it's secret, but there are a few things that we really want to focus on, right? Now, it's the seed venture investor on record for startups. The curious thing here is that, we're now in 2022. There's a lot more capital across the board. But if we're talking about seed investing, there's still relatively little, firms, especially institutions, looking to lead seed round, right, in Southeast Asia. So as a founder, it's, typically you cobble together a few seed funds, maybe some angel investors, and that's around. For us, we want to be that person, just being responsible for leading the round, working with founders to get from 0 to 1, post product market fit. And also, from a team perspective, we're quite focused on building a culture where everyone's either a founder or operator, because our belief here is that the conversations that you get to have with founders, if you're a former operator, is just, slightly different, right? It's a different dimension. You can share experiences, and you can draw very tangible experiences and network to help augment the success of founders that you work with.
So the seed investor, or at least I guess the first port of call when a founder wants to raise their seed round.
Exactly, and just to tie it all out, right? We have also chosen a really concentrated portfolio approach in that. Now we're building a portfolio size from fund one of about 15 to 20 companies. Now, as we lead rounds, we also take board seats to work closely with founders to get things done, right? Why a small portfolio size? That's the reason is because it enables us to work really closely with founders, and not to spread ourselves too thin.
We talked a little bit before kind of this call about, the challenges of this fund and kind of raising this fund. Anything that you want to talk about with both kind of those challenges and or current challenges that you have?
No, it's we it's 2021 is such a bleeding into 2022 is such a weird time period, right, for the industry and for the world in general. We launched the firm in April 2021. It took us 4 months to close the fund, which was amazing, right? By all accounts, I was expecting much longer. Never had I imagined us being able to, close the fund almost entirely on Zoom from our living room. Really thankful for all the support that LPs have given us. But it also spoke, I think, a little bit to the time period where we're in, right? In that everyone's really optimistic and deploying capital in a zero interest environment, right? And come 2022, it's almost the reverse, right? Now that we're heading into choppier waters in terms of capital markets and macro and geopolitics, what that tells me is that there's never a good time, there's never a bad time. Fundraising is equally hard anyway, right? Even if you are able to raise above target in record amount of and in a short period of time, you still have to figure out deployment, right? Because fundraising is just half the equation, for building a successful fund, and hopefully that turns into a successful franchise, which actually brings me to my second question. Our ambition here is to build a seed franchise in Southeast Asia. Obviously that starts with building, an initial successful track record of Fund 1, and then hopefully Fund 2, 3, 4. But beyond that, it's also about, thinking of it as a successful business, right? What that means then is, how do we think about building the team, building a culture of excellence, attracting the right people to the investment team, building the right processes, the right infrastructure. All those things apply, right? If you think long term, all the foundational pieces of a successful franchise starts now, and that's what I'm primarily, excited about.
Actually, that was, you kind of preempted that. That was actually going to be my next question. What does scaling that impact and that franchise, what does that mean? So I think obviously it's the fundraising, right? The funds are a key critical piece, right? It's the oxygen, but you're saying you spend a lot of time on thinking about culture and processes, right? In order for that to happen.
Yep, no, for sure. And one of the core operating principles that we have is, ultimately, how do we create an environment where every individual is not just a successful investor, but also a successful firm builder as well, right? By definition, paradoxically, if we're successful in what we do, our fund sizes would remain small, actually. Because our belief is that, if we are able to be exceptional seed investors, that strategy constrains fund size somewhat, right? And that also means that the team wouldn't scale in terms of headcount, right? But what would need to scale then is, our pattern recognition, the institutional knowledge that we build over time, and the brand that we build over time, the social network that we build over time, both internally and externally, and both within the portfolio founders as well as the larger community. All those take time to build, right?
That's really interesting. I think this is the second time, actually. So we've done 5 of these podcasts, and this is the second time where I think someone has talked about culture as much as, or at least having thought and thinking about culture as much as Hussein Kanji. I don't know if you know. It's based out of London, Hawkson Ventures, and they really spend a lot of time. I think McKinsey consultants come in and talk about what is culture, how do you develop that framework, and I think and now I recall the conversation. They were thinking about it because they were thinking about bringing on additional partners, and so and for the longest time they were operating for just the two of them, two partners,
Yeah.
and then it's really getting everything down in terms of principles, so that when they do hire somebody else, it's that much aligned. And he was saying they can't and they don't want to use money to attract partners, and they want to use values. And so it's very important for them to identify that strongly, I think.
Yeah, no, I think so. Because I think the ecosystem in Southeast Asia will graduate to a point where, there's going to be a lot more venture professionals in the ecosystem, right? And one way to be competitive and remain competitive is to differentiate via culture, right? I recently saw one interview by Peter Fenton from Benchmark, and it's quite interesting because he was saying that when he joined Benchmark, he took a huge pay cut from Excel, right? And he also gave up significant carry, coming from Excel, and there was the Facebook fund, so you compound, 10, 20 years, it's a huge pay cut, right? But I think, if the crux of it is that we talk a lot about, just being in an environment that is able to do its best work. And that's really inspiring, right? For me, and hopefully for, other venture professionals that want to hone their craft over a long time, in an environment that allows them to be successful.
And actually, to riff on culture is even more, like, I guess, because venture at the end of the day is a services business, right? And so the need to identify culture is that much more strong, right? Like if I guess if you had a very specific product, if you're developing a product, I think it's a little bit easier because everyone's channeling, all their energies into a physical, tangible product. But because it's a services thing, there's less tie, if you will, right? There's no product to tie people to. So the need for culture and identifying that culture becomes even more kind of impactful. So important if you take a look at consulting firms, for example, McKinsey, Bain, and BCG. On the outside, they're all consulting firms. But if you ask the insiders, it's very clear, that's a McKinsey person, that's a Bain person, right? That's a BCG person.
Yeah.
And I assume you would want people to say that's a Forge person, right?
Yeah. No, that's exactly right. I mean, the aspiration here is that, could we identify someone that's a Forge founder, and to your point, a Forge person, right? Yeah.
Last question to round it all off. And this is, what would be your advice for first-time managers or for people that want to kind of move into the venture space? Any clear or distinct pieces of advice?
Well, I guess it's said enough that it's hard, right? It's difficult, it's hard. Fundraising is tough. It's going to be tougher than you imagine. It takes longer. Those are table stakes, right. No, and I think one surprise I had was, I've been helping portfolio founders fundraise for a long time. What surprised me was it's actually harder to fundraise for a fund, because to your point, there's no product. You're not selling a widget, right? You can't point to a TAM per se, right? It's just harder to build a business case, right, for a fund. A lot of that relies on intangibles. A lot of that relies on track record, which is a bit of a chicken and egg, because if you don't have money, how do you build a track record, right? So that's a really interesting quirk about the industry. But I do think that one of the things that was the most helpful advice I had, right, when I embarked on this journey was be different. How do you really think through what your competitive edge are, right? And how you differentiate it, right? Because everyone tells by and large the same story. but is your story differentiated enough, especially in the category that you're investing, whether it's, a sectoral differentiation or a market differentiation or a stage differentiation, right? You have to find a way to break through the noise, and stand out and be different, being different, it's half the battle won.
That's great advice. Well, on that note, thank you very much for this advice, and hope to talk to you soon.
Thanks for having me.
Cheers.